Next up, we have Teqnion, presented by CEO Johan Stene. Welcome up.
Thank you very much. Is this on? Yes? Oh, yeah, I hear myself, so it should be on. Hello, everyone. Thank you very much. I'm going to show you a few slides and talk about Teqnion. My name is Johan, and I have probably the best job in the world because I'm the CEO of Teqnion. A little bit about us. I was a part of founding this company back in 2006, and we took a lot of inspirations from the industrial groups that came out of Bergman and Beving, and such as Adtech and Lagercrantz, and also, of course, a lot of influences from Indutrade. Me and my co-founder Jonas thought that we could do this much faster and better. My only excuse to that cocky attitude was that we were young and naive and we didn't know better. Hopefully we learned some throughout the years. We are aiming to build something that will grow. It feels like we're still in the beginning and learning, but we don't want to lose the feeling of being small, growing big. Here is the beautiful management team. We have to every day justify our existence since we only are a cost on our income statement. We want to always to prove ourselves, and doing that by supporting our subsidiaries and our co-workers. Of course, we have a lot of responsibility towards our shareholders to ensure that the group grows. And we always like to acquire new good companies to grow the group. I can talk a lot about this team. It's a fantastic team and probably the best team in the world, of course. And I'm really lucky to have these colleagues. We work towards these 3 financial targets. First of all, we always need to ensure that we have a stable balance sheet, and we do that by always keeping the net debt to EBITDA not exceeding 2.5. Today we are a bit below 1, which feels great in these times. We have a lot of financial stability to keep doing good acquisitions. Secondly, you see the profitability. We always make sure that our existing businesses are robust with good profitability, good margins, and healthy organizations. And when we have these 2 financial targets in place, which we always have, of course, we focus on increasing the earnings per share. That's what we love to do, and that's what we're having full focus on right now. The target there is to double that in every 5 years. A little bit about our history. We've been around since 2006, as I mentioned, and we have been growing up until 2019, more or less from our own generated cash flow from operations, and we've been able to grow by that. And in 2019, we did our IPO project and raised some capital, which allowed us to accelerate the acquisition frequency a little bit. A little bit about our figures. Last year, we turned around 920 million Swedish with EBITDA just over 100, and Q1 in 2022, perhaps you say, we increased the sales with a lot and the EBITDA with a lot more, and the earnings per share, as you can see, is also up quite a bit. We are always striving to become better. We are never content. At the moment, we need to work extra hard, of course, due to the fact of increasing prices, lack of material and supplies all over the world. It's really important for us to act fast We help each other within the group, of course, and always keep a very close relationship and dialogue with our customers and our stakeholders. It's very, very important. The diversification is great in these turbulent times, of course, with all the uncertainty that we have. I think that I love this business model even more now that it has to stand its test in this time. We love meeting entrepreneurs and new companies to acquire. We do that a lot. We meet over 100 companies. We have meetings with over 100 companies every 12 months. We talk to, we just looked it through, but I think we talked to over 400 companies for the last 12 months. We have a long pipeline, but we're very picky with what we decide to acquire. But from every meeting, we get a lot of inspiration. We love entrepreneurs, even though maybe we don't love the company. But we love entrepreneurs, and we feel that there's a lot of positivity in the world, even though that it looks like it is today. These people lifts us up, lifts our society, and make sure that we can have a good life, all of us. We have ongoing talks with approximately always around 10 companies. And I think that since we acquired 5 companies last year and that felt comfortable for us, I think we're going to have more or less the same pace going forward, at least for a while. What we're looking for in these companies, we look for profitable. Just on the top there, you see we look for profitable companies with a solid history, low business risk, and good cash flows. And it's important for us that we understand how they make money. That feels secure, because then hopefully we can help them in bad times. We also need a cash flow because we want to grow, and we grow from cash flow. We also try to figure out if their product or whatever they're offering to their customer should be relevant also in 10 years, not just right now or in 5 years. It should be profitable. It should be relevant also in a decade or two, because we're in it for the long run. For us also, maybe you figured it out by now, for us the culture is key. So when we do the DD, the people within the company, the management, the key stakeholders, it's the most important ingredients if we're going to go through with an acquisition. These are the people that's going to be our colleagues that we are going to work with for many, many years to come. To sum it up, we have fun. We love what we do. We have a fantastic team to do it with. We grow. We think that's fun. We are truly decentralized. We trust each other, we help each other, and we are scalable. And I think we're in the beginning. Thank you.
So thank you, Carl-Emil, as well, and thank you all for the presentation. We will start the panel discussion with Synnøve.
Yeah, so is this on? Thank you. So just a question on the acquisition pace or interest, to put it that way, in the current macroeconomic environment. Has all of the supply chain issues, as you mentioned, or higher interest rates affected your interest or appetite for acquiring new companies? And how easy is it to come through this, upcycle that we have had within M&A the past years? Johan?
I'm thinking how I should answer this. It feels like we haven't met any new thoughts from potential sellers at this stage. We look at companies that turn around from 20 to maybe 120 million, and as we feel right now is that nothing big has happened in their mindset of if selling or not selling their company at this stage. But I think we will see it soon, of course. But right now, I don't think so. But we also look a little bit outside the Swedish border at the moment, which means that we don't have. I don't have really the pulse on within Sweden at least this month.
Okay, and
Shall I go on, Andreas? Agree with that. I don't think we've seen that much, change in behavior from sellers yet. I think we're mainly focusing on buying within or acquiring within fields that we're currently active in, which I think in this environment is an advantage for us, because that means that we actually kind of have our management teams in our companies have a deep insight into that specific industry, into those specific difficulties that or challenges that the industry might have, meaning then that, it's easier for us to kind of align on the risks and get comfortable with them in this kind of environment, and I expect to and in more turmoil. And yeah, so that's what I think.
Yeah, I agree. But for us, we don't do very many acquisitions a year. We do them proprietary. It's not unusual that our discussions that our acquisitions are the result of relations and discussions that have been ongoing for years. So for us, I think it will continue to be more important with when we get the chance to acquire the right companies, we will still do it. And
I agree with that. If you're very kind of reactive in your M&A, meaning that you're waiting for auction processes and being contacted by advisors, then you're very dependent on the deal flow coming out on the market. And to be honest, I still think there is a good kind of good deal flow, but I expect that to become lower. But we have the same situation as you. Basically, building an M&A pipeline, that's not 3 months work. It's 3-6 year work. So that means that you're picking up discussions and then it's just a matter of being able to actually, once the situation is there, you have to be ready to execute on it, and then you need to be comfortable of the dynamics on that company, on their industry, and so forth.
I know these two companies a little bit, and I think we have the same idea that we don't look at the next quarter or the next half year. We look many years ahead. So the relationships with the potential sellers are normally very long. Our internal record is 9 years before we bought the company. We're going to break it, I think, within a year or two, because we're now on 11 years on another relationship. So we're not in a hurry. When we find a good company, then we become friends, and sooner or later we find the right timing.
And another one, if I may, just quickly. When we've listened to all of the companies presenting here today, you're all looking for, best-in-class, market-leading niche companies. We have a lot of companies looking for, it seems, the same type of, deals. What distinguishes the three of you? Do you think the pipeline is good enough or large enough for everyone to continue to grow, over the next 5 to 10 years?
That question is thrown at us at these occasions always, which is it's a very relevant question. Luckily enough for the economy and for our society is that there's new entrepreneurs all the time, creating new small cake pieces or niches where they work and become the best and leading. So it's a smorgasbord of new opportunities all the time. I'm not afraid that we're going to run out of good companies to acquire. Never.
No, and we actually, so we don't. Of course, we meet with our colleagues, but not that often. Not as often as you think. In most of the cases, we meet with other industrial buyers, international industrial buyers or local industrial buyers, or in some cases small private equities and so forth. But in most cases, the competition is from other industry buyers.
Okay.
Yeah, I agree. It's you would imagine that we always run into each other on all the we don't, and I mean, all companies they look the same, but there are, I think, small differences. What you like, what you don't like, what you feel comfortable with investing in, and I also think, as you once said, this is a question that is quite commonly asked, and it is a reality that the investment space for a small and mid-sized company has grown over the last couple of years. It's just a fact. But I don't believe it's just bad. I think there are a few very, very, very good aspects with that, and that is from the entrepreneurial standpoint. A couple of years ago, maybe 10 years ago, the industrial buyer was sort of what you had in mind when you were about to sell your life's work. Now there is an active and functioning market for financial buyers or industrial group buyers in this segment, which means that when we contact companies, there is an understanding of why we are contacting them, what is our business model, and I think the dialogue can build easier from there, which is, I think, something good for all of us.
But I think, but what I tried to say in my presentation was that there are more competition today than it used to be, or at least we feel that, and prices go up on a general term. So everyone have to find their way of kind of coping with that, and yeah. So either finding ways of adding value to the companies that you buying, making sure that you get the same returns. You have to spend even more time on positioning yourself as a buyer, building relations for 9 years, or really spending time on that. So it's a lot of hard work finding the right targets.
Thank you.
Chris, do you want to follow up with a question?
Sure. I'd like to ask a little bit about pricing power. I know Carl mentioned this, the ability to pass on prices, cost increases, and imagine that this will come up more in coming weeks as people suffer more raw material cost increases and wage increases. So I'm curious how you deal with that, and maybe secondarily related to that, and Carl can chime in on this part too, is how much of that decision is made in a decentralized way versus how much is pushed from HQ?
From my perspective, one of the keys to our success with regards to that lies within what you said, decentralized. So I think we, with regards to that, we're extremely decentralized. We have, we also you're fond of the pilot school, so meaning that our CEOs of our platforms that actually have their own shares in their own companies, meaning that they really have that entrepreneurial spirit to start with, but also have the incentives to actually, in this very operationally hard environment that we've had for the last 2 years, I think it's key to have managers that actually start working with those kind of key questions from day one. They're not turning to their closest manager or start trying to get a hold of the board of directors or so forth. They start working with it day one. So that's the first thing. And then secondly, you have to have a product or a service that are actually able to that is there is a strong enough demand for to actually being able to push on those prices to the customers. And there we talked about that earlier. Niche companies having good market shares. So I think if you have that, you in most cases have the pricing power as well.
Sorry.
Go on, Johan.
I love this topic because we are very proud to present ourselves as sales organization. So pricing and everything around that is what we talk about all the time, and pricing power. And we would like to, as many people as possible within our organization should be focused on the customer and on the deal. We love the deal. And making good deals and keep the relationship alive throughout the years with our customers and also, of course, with our suppliers. So But having the right pricing power is of course key, and that comes down to we like products. We fancy developing a good offer and a good product for the customer, but we love the deal. We love making the deal, so we focus on sales. And a big part of sales and sustainable sales is having good pricing power. So we talk about it even though that there are good times. Now it's bad times. We talk even more about it, but we always talk about it, and we always try to improve, and we always try to increase margins, because if we're going to talk sustainability, a sustainable company always will earn money, because then you can adapt to new turns in the economy and in the world.
And from Eden, I think I agree with Andreas. Our business is also built on the idea that, I mean, basically the absolute majority of all decisions should be made by the managers, and we would never presume to know better about pricing than the managers that are actually hands-on talking to customers, who knows the relation between suppliers and customers and the dynamics on their specific market. However, from Eden, we see it as our sort of something that is very important for us working with the group companies, that we are making sure that pricing and sourcing is very high up on a strategic agenda, in the board, etc. That is something I think we work very hard with from Eden, centering towards the group companies. But what the actual outcome of the pricing is, that will be the decision of the managers, because they are the one who knows.
I think what was one advantage of being a bit more diversified, which I think we all are, is that you get early signs from different parts of the group, which then could benefit the other group companies. So that's also, of course, a role that you have to take as the central, the headquarters or the central organization, to actually pick up those early signs and pass those on to other group companies where you feel that might be beneficial. Not only pricing, that could be in other other cases as well.
And I also think that the diversification and the broadness of the groups also make you feel a little bit within a specific subsidiary. You feel confident that you're allowed to lose business on top line as long as you keep your margins. I praised Lagercrantz and Jörgen Wig a couple of years because they dared to do that, and they took out Lagercrantz out of the low margin area up into the high margin area, and that's how you build a sustainable company.
I want to get back to the competition for takeovers. So what is your best arguments trying to convince entrepreneurs to sell businesses to you rather than the larger and probably more well-known players like Lagercrantz, for example?
Can talk about that all day, all night, and tomorrow as well. But normally I think different type of people would like Teqnion or Idun or Volati or Lagercrantz. So pretty soon in building a relationship, they know if we have a good fit or not. And then the price is not the most important factor, actually. It's if they see that if it's an entrepreneur that has built this company, it's their life's work. It's very important that they find a secure harbor for their life's work. That is the most important, that their co-workers, maybe family members, will have a good future, and that their company name will remain and become stronger and better in the future. So, but then also it's a personal connection, personal relationship building. We work very closely with our subsidiaries sometimes on an operational level, and we are very clear with that from the beginning, that we need to like each other, otherwise this deal will never go through. And we look at so many companies, we turn down so many companies because the people is so important.
That goes both ways.
That goes both ways,
Exactly.
absolutely.
Yeah. No, I agree with that. First you have to like each other's. So that's to your point. And then I think if you're a seller, you want to sell to. I think we share a lot in common which sellers like it, which is we have an extremely long-term perspective. Actually, you sell to us, and we're not looking to flip that company in 3 to 5 years to sell it again. You know, we're extremely long-term, meaning that investment decisions, strategic decisions, all of those are made for the long run and not for the short maximizing profit or planning for an exit and so forth. And then thirdly, what we see now when we started focusing more on kind of add-on acquisitions and in many cases are more regarded as an industrial buyer, then it's to become part of something, become part of a context which is growing. So if Teqnion, which is has been the Swedish market leader within labels for a while, now they're, I think, the market leader also in Norway. And there are many companies that kind of want to take part of that journey, be part of that group. Success brings success, and that's not only acquiring company. That's also recruiting talented people, for example. It's the same logic.
Well, I don't know if I have anything intelligent to add. Actually, it's.
We'll go on to the next question. That's fine. So now, do you have any?
It's not fair that I start.
Okay, Chris, do you have another one?
Yeah, sure. I'd love to slip one more in. You know, I love everyone talks about their long term and buy for keeps when you're looking to acquire companies. I'm curious to know what happens when a business fails. It could fail for no fault of your own or your managers, but things change, landscapes change, businesses underperform for different reasons. How would you deal with that situation, or if maybe how have you dealt with it in the past?
You start, man.
All right. Wow. Well, that's a tricky one. All right. So I don't think it differs very much from any other sort of companies. Of course, when things go wrong, for example, we had maybe 2 companies that were heavily affected by the corona pandemic in 2020, heavily affected by it. And for us, it comes down to we have to have in our mind the right business model with co-ownership with management, which ensures fast and in that case quite extensive actions in the business to make sure that they come out of it alive, but ahead. And in another aspect, of course, when things go wrong, the time that we spend helping management, not running things, but helping management in a difficult situation will increase exponentially, I would say. So it's a combination of time and support and the right structure, I think.
Yeah, and you said that we are for sure a long-term owner, and we view, when we're looking at the acquisitions, we look at it 10, 20, 30 years. But we're not religious about being owners to all of our companies forever. I think if you are a responsible owner, you have to make sure that you're the best owner. And that's not always the case. I saw that on your slide you sold one, or yeah, it was you. We also sold a couple of companies, and not as not in a defense, but not in the midst of a crisis or turnaround or anything like that. But you have to ask yourself, if you're a responsible owner, you have to ask yourself whether you're the right owner. And you have to do that every second, third year or something like that.
Sometimes things go bad within companies, and if it's due to the fact that something happening in that market niche, and it's not due to the fact how we acted or how our subsidiary acted, then we have a lot of patience, and we're just trying to hug them and give them energy and support them through the hard times, and maybe invest a little bit more and make sure that they are ready when the tide turns, so to speak. But sometimes, and maybe more common, is that when the culture is going south, and then we are very fast on board, coming down with a team or a person, trying to coach that management towards the right way, and do that very closely, and give them a lot of chances to improve the culture, and then we coach the CEOs very closely. Otherwise, we support them very closely. Yeah, I don't know. That was a little bit of a different answer to, but I agree with my colleagues up here, of course, when it comes to the other things. But for us, it's very, very important to make sure that the leadership within a company makes sure that the staff there enjoy going to work, enjoy being the best at what they can be. And if they don't support that culture, we come there and help them.
Thank you so much. We need to stop there.